Hello, they say they save the best for last. So welcome to the best and the last panel today. Today we're talking about emerging digital asset trends. And we're going to be focusing on three main topics today. The first is tokenization, second is decentralized AI, and everybody's favorite, which is a mouthful, decentralized physical infrastructure network, or DPIN for short. So let's get into it. And before that, I'd really like Ben to set the scene for us about what has been happening in the landscape and the market for a while. So given that you run the crypto research firm, Collective Shift, can you give us an outline of what's the investor sentiment towards digital assets in the last 6 months? And can you, if it's possible, highlight what are the three key things that have occurred that have led us to where we are today?
Okay. A sentiment the last probably 6 months has been pretty flat. I mean, Bitcoin, the whole crypto market has sort of been chopping sideways for the last 6 months. But ultimately what we've seen a large number of new technological advancements, I guess, behind the scenes that, quote unquote, aren't very sexy, but these guys are very smart in their own field, speaking about, DPIN, AI, security tokens. They're probably not the most exciting things to talk about, but there's the technology that's actually being built is really exciting. And, retail investors haven't really caught on to that at the moment, but institutional investors have. So, from the Bitcoin ETF, the Ethereum ETF, especially out of the US, BlackRock, one of the largest institutional funds in the world, have launched a $500 million tokenized fund on Ethereum. These are tokens and blockchain-based tokens where people can buy in, and we're investing, on-chain, which is really exciting. So the market is continuing to grow. Bitcoin's compounding at 60% year over year. The altcoins haven't ran too much, but there's some really exciting stuff that I think we'll speak about today that, there's a lot to be excited about.
Now that Ben has set the scene for us, I want to take a moment to reintroduce our panel very briefly, just so that you'll understand that we have very different perspectives and voices on the panel today. So first we have Ben, who is from Collective Shift, and what he offers is crypto research and education. And then we have Ryan, who works in securitized tokens, and we have David, who works in the digital asset firm Digital X. They are ASX listed, and they do many great things in the digital asset space, including tokenization, which we'll talk about. And we also have Joseph Beverly from Singularity Net. He works in the Center of Decentralized AI. And as for myself, I run Transhuman Coin. We are a project that supports other science and tech projects to help overcome limitations of human biology. So we were recently filming in Hollywood for Killer Whales show. It's the Shark Tank for crypto. So catch us on Amazon Prime or Apple TV when it comes out at the end of the year. All right, so now that Ben has laid out the lay of the land, I do want David to go through what Digital X is doing, especially in launching your own ETF. I want to understand and give the audience a perspective on what is the potential impact on the space with the recent Bitcoin and Ethereum ETF approvals.
Sure, thanks Elise for that. So yeah, DigitalX is an issuer of a Bitcoin ETF on the ASX in Australia. Realistically, the first of its kind in Australia. I think in terms of the overall impact that ETFs are having or have had, obviously there was an important US approval earlier in this year. My sort of view is that the impact of that is probably greater than the original, the AUM or the flows that these funds have attracted. The effect is probably greater than that in terms of the overall footprint. Earlier in the year, groups like Fidelity are now recommending as part of a strategic asset allocation, a sort of global, a smaller allocation to Bitcoin, coming from that, improving portfolio return, improving Sharpe ratios within something like a 60-40 bond equities portfolio. So that's definitely a big change between where we were 5 years ago and where we are now. In terms of like what's to come, or like what else is the potential impact? I think there are pretty big institutional pools of capital that haven't necessarily been addressed. A good example of that is probably corporate treasuries in the US and Australia. So FASB did some industry consultation when considering a rule change in relation to the tax treatment of Bitcoin specifically. And in that industry consultation, all of the respondents that they spoke to, these are large listed US companies, came back in favour of a decision, yes, we want you to change the accounting treatment of Bitcoin from an intangible asset to something that we can mark at fair value every month on our balance sheet. So at least tacitly, that sort of seems to imply a level of receptiveness to Bitcoin from that asset allocation vantage point, and the effects of that we'll hope to see in future. A similar story may be playing out in Australia. Like, a lot of dealer groups here are receptive to the concept of advising on digital assets within their client portfolios, and yet we're still very early in the education journey and bringing advisors up to speed. Like in Australia, we haven't had these listed products for very long. So that's kind of the next step in Australia, and we're excited to be a part of that at DigitalX.
Up to this point, we've heard about what has happened up to now in digital asset space. And from now, we're going to look forward to the future. What are the trends that are driving investment in this space? So the first theme we're going to talk about is tokenization. So tokenization, specifically of real-world assets or securities, is said to be the next big thing. I have been working in this space since 2017, and there have been many companies who've attempted to tokenize real estate specifically. So what is tokenization? It is the process of converting rights to an asset into a digital token on a blockchain. So you can buy it, sell it, trade it. Now, when it comes to real-world assets, we're talking about property, we're talking about stock. So to the panelists, where are we headed in terms of tokenization? And can you provide examples of any industries or companies that are doing it well?
What a controversial topic. I think we even debated when we had our meeting together as a team last week. We were like, we had all these terms and we're like, okay, this is great, this makes sense. And then we're like, hey, this is all just tokenization. The reality is tokenization is making something that is more available in a smart contract form, which doesn't really sound that sexy, but when you think about the benefits of blockchain being around T+0, having smooth transactions and ability to have public transparency, it really does get really cool, if you're into reporting, of course. But on tokenization, anything is more liquid and flexible if it is in a smart contract form. The way we can automate payments, right? Even looking at the examples of Aave and MakerDAO, they're essentially lending institutions, right? They're taking deposits, they're lending out currencies with a yield for either side and it's rate, and it's all algorithmic. There's not 20,000 developers working there. It's a very lean team. So if they're able to do this at scale with billions and billions and billions of dollars under management or within liquidity, why can't we be doing this in the world? And so it comes down to getting everything into the same communication format, smart contracts, et cetera.
Yeah, I think one of the things that can make tokenization and real-world assets so confusing for market participants is a pretty broad category that covers a lot of things. So if we think about the spectrum all the way from how this value is represented, if it's a permissionless token that anyone can buy, there's quite a bit of counterparty risk in making sure that the token is locked to the underlying collateral, and that's where things have gone off the rails, all the way through to the other end of the spectrum where they are regulated financial offerings issued as digital securities and recognized by that jurisdiction as a share or a bond, and it just happens to run on blockchain rails. So there's a full spectrum of real-world assets, and I think that's where people can run into trouble when they kind of all get bundled into one.
It's also one thing, really quickly as well, it's not just financial, it's also data, right? The future we have before us is that we're moving from this idea of everything is really siloed, it's paper-based, but we live in a very binary digital world. So why is it that there's so much data that is just can't be unlocked, right? It's so secure, it's siloed, it's away from us. But tokenization doesn't just mean kind of putting more money in a better communication layer. It actually means having better data available, right? It could be reputation data, credentials, attestations, right? It could just be proofs. Maybe you don't want to do the transaction of your selling a house on chain, but maybe you want to have the proof there, right? Because that's harder to lose or easier to lose depending on kind of what can become from what technology you use. So data being tokenized is probably the biggest benefit. Making money move faster is great. We love efficiencies, but whole new economies being created when you have easily accessible, queryable data that can have select disclosures, privacy preservation over it. And that's really the main boom. And we've yet to see that because you don't really make much money in non-transferable attestations, right? That don't have any monetary value to it. So it does take a bit more of a push, and people would be more socially minded as well to test these things out. We're seeing with more institutions. So
sorry, and sorry if you want to move on, feel free to cut in. But just to give an example as well, at DigitalX, so we have a tokenized property fund, and happy to talk about the strategy at drinks after. I know we don't have too much time left, but one of the things that we proactively did was reflect the NAV and the unit register on chain. So it's reflected on the actual blockchain itself. And I think like an obvious one for a lot of people that have been in this space in the financial services sector is the coupling of unit issuance with settlement. So the technological advantage of blockchains is that you can do that. You can receive consideration for issuance of unit capital at the same time as issuance. So that's potentially something that, again, it's probably going to depend on whether groups like Atomic and Apex and these large unit registries are going to want to play ball, and there has to be a really real business case for them to do it because there are a lot of network effects that they need to generate in terms of having all of these people, using digital assets as part of that settlement process. So there's a lot that is yet to be done in industry, but of course the technology itself is absolutely capable of facilitating these sorts of ideas.
Ben, you want to add?
No, I think we covered it pretty well.
And Joseph wants to remind me to say none of this is financial advice.
We have no lawyers on the panel, so which made it very clear. It's not financial advice, tax advice, legal advice, any advice.
Now, I don't know if any of you actually mentioned the actual company that you think is doing well in tokenization.
Well, that's the thing. Tokenization is smart contracts, right? So we can look at tokenizing value itself with Aave and other decentralized products and solutions. You could look at, tokenizing computation services with Nasana, which is an amazing startup using distributed computation device as services. Helium using for, I gotta make sure I get this correct. It was radio waves, and there's one for Bluetooth. So really, we're like, think about data as just a basic side by itself, and hold it up in front of yourself and think, wow, how can I get this to transact and communicate with things better without me actually having to be involved in that? Obviously, we're not the AI conversation yet, but that's really when you get more exciting use out of blockchain. You have everything on the same communication layer, and then you have AI as an intelligence layer that's able to communicate, transfer information, and equally co-develop plurally with all these different technologies, services, and intelligences. So yeah, that's what I kind of add as well.
Ryan, Ben, did you want to add something?
I was just going to say that there's a company that was founded in Sydney called Maple Finance, and they're sort of on the edge of tokenization of real world assets. It's a company, transparency, I'm an investor in, but just the ability, I think tokenization in the day, very simply, is just a way you can buy, real world assets, for example, on chain where there's full transparency, instant liquidity, T0. If you have assets locked up in the stock market, for example, or you want to go and, sell some gold on Sunday, right? It's going to take you 3 days to move it, and the banks will shut down. They'll ask you all the reasons why. Tokenization, removes all of that, removes the middleman layer. You can see Maple Finance, for example. You can see exactly how much value is locked on chain. You can see what they're doing with the money. Token holders that own the Maple token actually get the interest of the fees generated from people buying and selling, and it cuts out the middleman. So tokenization, I believe, is going to be the future for a lot of assets in the future, because it's just easier, and consumers will find easier and better products.
And Ryan, your company DSG does tokenization. Can you explain your approach or how your clients are approaching it?
Yeah, sure. So at the fully kind of regulated end of that spectrum, we're a platform that allows issuers to, sell equity or debt to raise capital. And then we also connect them with investors that want to invest in that and have a secondary market for that as well. So that very simple connective tissue actually unlocks quite a bit for quite a few market participants. Of course, there's the SME kind of equity that we often talk about, but even things like even something like gold, what Ben said, being able to bridge that on chain means that you can unlock this 24/7 trading, collateralized loans, all types of things you can build in with permission DeFi products once you get them on chain. So that's a really big kind of passion area for ours, being able to issue securities and have them on chain. At a very high level, it allows access to previous participants that were priced out or inaccessible, but really it's about unlocking what you can do once that's on chain, how fast it moves, what kind of stacks you can build on top of that. And traditional finance does lots of things really well, but it does get criticized for intermediaries and opacity. And you don't have to look back very far to remember times when there were too many layers of opacity between the holder and the collateral, things get messy. And one of the benefits of blockchain is you can provide that transparency.
Now, I want to switch to AI. In the last 24 months, AI has gone advanced very quickly. So many advancements have been made by OpenAI, Anthropic, Mistral, many others, and also by the hyperscalers such as Google, who you just heard from, Meta, and all the big tech companies. So this has led many to question whether it is safe to allow so much powerful AI to be concentrated in the hands of few. So the decentralization, or the idea of decentralization of AI being the path forward, has gained momentum, I should say. So in your opinion, is decentralized AI where we should put our money, and what needs to happen to make decentralized AI work? Ben, I want to start with you.
I don't claim to be an AI expert at all. All I know is that blockchain is hard enough, and people building on blockchain is extremely difficult. AI is probably just as hard, if not harder. And then to bring the two together is extremely hard from a vision perspective. There's some amazing projects with big visions in the AI space. I haven't seen anyone really be able to deliver. From an investment standpoint, though, it is a very sexy narrative that investors love. Crypto and AI, people jump on, and we've seen some really good returns in that space, in that sector. But from a fundamental level, I haven't really seen any of a crypto AI product really come together to actually achieve something that the vision. I think it's a long way down the track. But I'm sure these guys can talk a little bit more about the tech. Joey, I'm looking at you.
Yeah, sorry, and I don't want to wax philosophical here, but you opened the door for us. I think so. Peter Thiel wrote the forward to a book called The Sovereign Individual, which he sort of framed this this kind of contradiction between like AI on the one hand becoming very powerful, able to govern the allocation of resources within an economy, as being fundamentally kind of antithetical to something like Bitcoin, which is ostensibly about the protection of free market mechanisms. And so I don't want to be too sympathetic towards conflating the two, because at least at a conceptual level, they seem kind of transposed in some way. The existence of extremely powerful AI is something that I think technology leaders are worrying about. I can't necessarily add any value to that discussion, but I view it as a relief to see that there is a fair amount of investment capital flooding into the cryptography space, because if there aren't people paying for people to solve hard cryptographic problems, then potentially we're seeing the growth rate in the availability of compute, as well as the kind of the functionality of that compute in AI sort of outpacing the growth rate of the strength of our cryptography methods and protocols themselves. A lot of people are worried in crypto about AI and quantum computers breaking the SHA-256 encryption standard, which would be catastrophic for crypto and probably the rest of the world, given how reliant different defense and other security systems are reliant on that standard. So I don't want to sort of conflate the two, because I think in some sense there is a battle between them. So I don't know, maybe that adds value to the question.
I'll go next because I don't want to go last, because Joseph knows the best. So I don't want to go after him. What I think blockchain brings to solve AI problems is blockchain enforces digital scarcity in a world where you can copy and paste, or these days you can deep fake, and it's very hard to know the provenance of who has created content. Blockchain did that for digital value. It enforced digital scarcity. You can't copy and paste a Bitcoin. And so there's room, I think, to bring real solutions to AI, potential generative AI kind of misinformation problems that are only going to get worse, especially coming up with elections and things like that. So I can see blockchain solving some of those problems. But I haven't seen any projects that really excite me, but I can see the potential.
Jump into it. So the two parts of the question, one part is about investing in the investments in the decentralized AI, and the other part was around decentralized AI as a concept and like the technology. Those are the two parts of the question.
Yes, give your thoughts on, do you think decentralized AI is the path forward?
Okay, so first part on investing, easy question, everybody, super easy. How many traditional investments can we make into a purely AI company right now? Maybe private equity, maybe you have some debt financing. There really isn't any direct. It's diversified, right? You can invest in Google, invest in NVIDIA. There's other organizations that are part of this very large supply chain, everything from electricity, pure power, all the way to computation, through to hardware, through to creating AI inference machines or AI inference models. And then finally where we are right now with more value-added goods on top of that with ventures. But it's not really anything that's purely available, very easily to invest into. But then when you look at crypto, high liquid, fast-moving, fast-paced market, you can see fundamental correlations between PR, and press for that matter as a whole, and traditional AI having an absolute impact on the values of other AI, but AI tokens, decentralized AI protocols, because really decentralized is a very big concept. We don't want to define it today, but the decentralized an aspect of the company. It's very rare to find a purely decentralized company, an organization. It's probably aspects and characteristics that are decentralized, or centralization is turned up over centralization. And so you can see a fundamental impact. And I can't really mention any tokens because of some things that I'm not allowed to say, but there are some tokens out there where you look at Sora, when Sora was announced, or when there was a plummet in, let's say, some controversy, you could see a very clear impact on the crypto market, because retail investors, and especially a lot of investors in crypto, what do they want to do? They want to make money, right? They want to try and move with trends and narratives. So they have all this liquidity available to them, and they're like, wow, I really want to invest, but I can't invest into a purely traditional share or investment vehicle. So what do? I go find an AI token that I like, makes sense, I invest into it. And for one reason or another, they have. And so for decentralized AI as an investment, it's not really an opinion, it's more objective fact. People are investing because they want to follow that trend, but they have a lack of accessibility to traditional vehicles to invest in AI. And as well, traditional companies that are in AI are generally diversified in their approach, have a bunch of other business operations, and aren't just pure AI, even without NVIDIA. And then for the element, like, should we even invest into our time into AI technology and decentralized AI technology? Well, it comes down to philosophy, and I like the point of philosophy because there's privacy preservation issues, consented data issues. We all want to customize AI, but the path to getting there is actually quite painful. And there's amazing companies out there like Verida, who's based out of Adelaide. They're creating a privacy layer to allow for consent-based data to be used for customized AI, which is amazing, and it's actually locally to us. But the problem there is it takes a lot of people in this village to create a very, very strong community. And decentralized AI will only ever last if people are putting more money into the different sections, everything from distributed computation, self-governance procedures, even the token standards themselves. So I think the technology space is really amazing. You can access a significant amount of computation, capital, human resources, and even capital and intelligence, but it takes a lot of effort to get there in the first place. So I recommend people just doing basic correlation, like fundamental correlations between press releases retrospectively. Maybe someone will make a machine learning model on this, be pretty cool. But that's really the kind of thing I've seen personally from my own view, working at SingularityNet and working in decentralized AI and crypto as a whole for a while.
Personally, I believe open source will solve a lot of the problems that people think decentralization will solve for AI. However, given that you do work at SingularityNet, which is one of the earliest projects, Web3 projects or organizations that is building decentralized AI, I am an early investor. I did invest in the ICO back in 2017.
Thank you so much. Paying my salary.
Well, I want to know, what is Singularity's approach going forward? What are you planning on doing so you are part of the race?
Yeah, absolutely. So we have 3 major pieces that we're launching. This is not a pitch. This is just really what we're doing right now. We have OpenCog, we have Hyperon, and we have Knowledge Layer. So OpenCog is meant to be around AI sentience. Hyperon is meant to be about AI reasoning. And then the Knowledge Layer is about knowledge graphs, so better graph databases. So that when you wrap them together, we should be able to build some level of proto-AGI. And just for everyone's knowledge, the CEO of the company, Ben Goertzel, he invented the term about 20 or 30 years ago, AGI. and since then has gone on to publish a series of papers. We work heavily in reputation systems, governance systems. We work with everything from governments, through enterprises, ventures, etc. But not a pitch, just to tell you that like decentralized AI is not just a crazy theoretical idea. It's very actively involved in a myriad of port codes through to other ventures and institutions that are working with us. But like our approach is, if you can't build open and publicly, then you maybe close behind closed doors. And AI that could be developed behind closed doors, like AI is really going to be a public good, and it's going to affect all of us, because if something goes rogue, self-replicating, these challenges, if not mitigated or if not audited properly and openly, then you'll have significant challenges. About 60-70% of our code is open source. And as well, we're developing out an AGI or AI-based domain-specific language called MetaMotto in the Atom space. So we're trying to help developers that want to build out in an open area and open source the tools, because right now it's a little bit complicated if you don't have access to those SDKs and et cetera, and other tooling, sorry.
So the last theme is decentralized physical infrastructure network. A bit of a mouthful, so we'll just say DPIN for short for now. So early versions of DPIN, you may be familiar with torrenting or peer-to-peer technologies such as LimeWire. I think I might be showing my age when I say that. The difference now is that we have blockchain technology. So we can think of DPIN for compute, data storage, or internet access. Helium was already mentioned before. What are the trends in DPIN that you're seeing?
I'm not starting. I don't know.
Yeah, I'll start.
That are worth investing in.
DPIN is a new narrative that before that was just tokenization, or maybe it was RWAs. We actually are losing count of these. We're creating a lot of new terminologies, unfortunately. But with DPINs, we're trying to access things like IoT devices, right? If you're in insurance and you're making an insurance protocol and you want to do community funding for an insurance protocol, everyone raises the money together, but how do you determine when to pay out the premium, or when to receive premiums and to pay out? Maybe it's going to be on IT, maybe it's going to be on weather, maybe it's going to be on other kind of sophisticated, complex data sources that allow you to actually leverage that. But it's real world. We're actually interacting in this world. We're just using blockchain as the data layer and smart contracts as the programmable contracts to allow you to interact, obviously, automate and pass. Simply.
Yeah, and there's been so many different groups. I think there was one group in Australia that had a project where they wanted to have more sort of bespoke insurance for farmers. So they would have physical sensors on farmland that were detecting for the atmospheric attributes that were material to the insurance contract for the farmer themselves. So things like that, and then the physical sensors are triggering events internally within contracts that determine payouts between the insurer and the farmer. So that there's all of these really super ambitious projects that seems like it's been going for ages. It was probably one of the first areas that I started looking to in crypto. People are trying to build decentralized 5G in the case of Helium. People are trying to build decentralized radio towers in the case of a project like Foam. I mean, they're paving a pretty hard road for themselves, given that GPS works pretty well and 5G works pretty well. So I think and we alluded to this before, for a lot of these projects, the question is going to be what is the key advantage, or what is the key commercial implementation that's actually going to be valuable for enough people that they can justify the business. And there's a lot of probably people that are a lot of froth that people talk about in terms of projects that haven't gotten to that point. So I'm sort of waiting for the other shoe to drop on DPIN, not to be too cynical, but
I'll take a slightly more optimistic approach. But no, I agree with everything. Two projects that I'm excited by, Arweave and Huddle01. So Arweave is kind of a decentralized kind of Dropbox for online storage. And then Huddle01 is trying to create a Zoom or a Microsoft Teams alternative. Why both of those interest me is because they've built an entire kind of miniature economy around incentivizing node operators, providing a really important service that's the backbone of lots of our workday, but also with the recent Microsoft outage that crippled offices around the world, highlighting the fact that actually redundancy and outages and security are actually something that are important. And I'm not saying those projects will fix that completely, but they're a glimpse to what a decentralized and more robust and secure future could look like for that infrastructure?
Yeah, I think there's two ways to look at it in my point of view. There's the investment layer of like, do you buy this? Do you think it'll go up? And then do we actually need this in the world? And there's a lot of stuff that goes up that we don't actually need, and that's my opinion. In the cryptocurrency space, my opinion is there's tens of thousands of solutions to probably about 8 problems we actually have that we need to solve. But that doesn't really change an investment perspective, whether it be AI, DePIN, these things tend to go up because people like the idea and we invest. So, I am personally invested in a DePIN project called Hive Mapper. They basically have a physical mapping device. You drive around and you map as you drive, and you get rewarded through tokens, through smart contracts based on the data that you capture, and then they sell that data to, places like Google, for example. Does that need to be on a blockchain? Can you just do that without it? Maybe, maybe not. That's what we'll soon find out.
Connect with us on LinkedIn. We'd love to continue the conversation. We'll also be out in the area networking, so we'd love to continue chatting. If you have any questions for the panelists, then feel free to come and approach them. Otherwise, please thank the panelists, and thank you so much to attending today's event.
Thank you. Sure, thanks, Elise.
Thanks.